Here we have the 2-hour price chart for GameStop Corporation, stock ticker GME. So as we can see here, we're starting to show some declines here after posting recent highs just prior to reaching the $30 mark. This $30 mark is a level that I've been talking about here for quite a while. With most of these videos, kind of the main question that I ask people is to just sort of imagine themselves as a short seller. What would you do if you were on that side of the market, and where would you be placing your trades? Some of the comments I've sort of disregarded that sort of mindset, and I think that that's a huge mistake for people to be taking that type of mindset. You really have to look at both sides of the market here, and try to identify price zones where the short sellers might start to be sort of attacking the market, bringing in their short sell trades, and trying to force prices lower. I don't think that this is something that should just be disregarded, because this is much more likely to result in actual share price movements rather than random tweets on the internet or some random piece of information that people often tend to focus on in some of these other videos that are posted on YouTube. So currently, what we have here is this failure that occurred at $30 per share. There's not much of a doubt here at this point because we are starting to break through some historical support zones. As we can see here, I was pointing to this level. That's why there's an arrow here. During prior videos and prior trading sessions, because this is where I was expecting short sellers to start to materialize and start to enter into the market. This is not the first time that we've seen this type of activity occur here. So, what we really need to do first is try to look at what happened last time the share price saw a failure at this $30 mark. So here we can see, this white line here sort of extends to the price lows, which occurred at roughly, this would be $22.30. So, this was a fairly significant failure here. I don't exactly expect the same thing to occur this time because some of the selling pressure that we're seeing is much more subdued. It's not as forceful as it was previously. As we can see here, we can kind of zoom into this prior candle. Um, this is really where most of the selling started to accelerate last time prices failed at this $30 mark. So I don't expect the short selling positions to be as successful as they were last time, mostly just due to the fact that um, you know broader momentum readings are just not the same as they were at that point. Um, Try to readjust this chart here for a minute. So, as we can see here, there are some fairly significant large size red candles here, but we're already starting to stabilize well before this $22 level. And I do think that that suggests that we could start to see sort of a slowdown in this downward momentum relatively soon. All of that said, there are some points that need to be made here because there is some damage that has been done to this chart. First, I would point to this 618 retracement level. This kind of white line here. I'm sort of underlying it. The reason I say this level is significant is because it's the 61.8% retracement of the move from, let's call this roughly 2380 to these recent highs at roughly 2980, just below there, 2979. So it's the 618 retracement of this level, and that is typically the most important Fibonacci retracement. In addition to that, we have this kind of orange sloping line here. I'll kind of zoom in a bit. This line here is the 50-period exponential moving average. So, as we can see here, when we approach this level, markets tried, to kind of base here. And I do believe that there was some buying activity that entered into the market. You've got kind of a doji candlestick pattern here that does show that downside momentum was starting to slow at this point. But it wasn't enough of a green candle in order to support prices here. So when we have this following red candle, what really occurred here was a break through this 618 retracement level. That's kind of this green zone here, as well as the 50-period exponential moving average. So it is a fairly significant break, and this is a price zone that I pointed to in the prior level. So, even though this is a significant break to the downside, what I do want to kind of point out here is the fact that the selling pressure itself is starting to kind of flatten out here. we can zoom into these candles themselves, and we can see that there's, some of these candles show fairly limited price activity. I mean, in either direction. I mean, this candle here, this kind of doji kind of cross pattern here, it's technically a green candle, but you're essentially closing, right at the highs for the session. The highs and the lows for the session. There's a very small distance between those, and that trend here is kind of continuing. So it does look like we're starting to kind of base out here, and then this is happening right along the line with this purple sloping line here, which is the 100 period exponential moving average. So, it is quite possible that we're starting to flatten out here. And then in addition to that, you do have to note the position of the relative strength index. There are two things to kind of note here. One is the fact that there's a large distance between the purple line and the yellow line. The yellow line is the exponential moving average of the relative strength index, which is the purple line. So normally you don't see distances that are this large. Like this is a significant gap between the relative strength index and its moving average. So I would expect this to start to close relatively soon. Um, the relative strength index itself is more likely to gravitate toward the exponential moving average rather than vice versa. So what that would mean in this case would be that the relative strength index would need to slope in the upward direction. In addition to that, you're relatively close to falling into oversold territory at this point. We're currently trading below 40, and readings at 30 would be considered to be oversold. And then that means that the stock price is unlikely to extend much further. So, the reason I point all of these things out is because, it is important to go back here and to look at what happened last time we saw a price failure just ahead of this $30 level. It was a fairly significant move lower. But what I'm saying is that in this case, the move to the downside was much more forceful and drastic. It happened much more quickly, and there wasn't as much positive momentum that was visible in the market. So, people like to point to prior occurrences and say, well, this happened in the past, and therefore it means it's going to happen again in the future. The market does not work like that. The common phrase is past performance does not guarantee future results. There is a lot of truth to that. There's nothing, just because something happened in the past, it could happen again in the future, but that is not a guarantee that it will happen again in the future. And overall, I don't expect to see the same type of, rapid decline here that we did see previously, even though we are seeing a failure at this $30 mark. So my advice here is for people to continue looking for areas where short sellers are likely to be camped. Where are they likely to start entering into their positions? I have been pointing to this $30 level for a reason. So this was a very possible turnaround point. And as we can see here, that turnaround did come to fruition, and now we need to start looking for a bottom and an end to these declines. So here's the current market analysis for GameStop Corporation, stock ticker GME.